Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and education are presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are the key tenets to my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX and SPY. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with the NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken with futures contracts, shares of stock, or options depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions or comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector. Welcome. Glad you're here. And please remember to keep your questions on topic. All right, here's my agenda for today, Wednesday, July 17th. First of all, I want to cover news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with news items, economic data, and events for today. And I'm going to go take a look at the S&P 500 futures and Bookmap. This is the ES futures and Bookmap. So overnight, there were several news items that seemed to be contributing to the big sell-off today. First of all, ASML, the Dutch chip equipment maker, reported earnings overnight. And apparently the earnings were okay, but the guidance was weak. And then there was news that the Biden administration is considering additional Chinese chip restrictions, exports to China. And then finally, Donald Trump made comments about Taiwan that they should pay pay the U.S. for defense. So all that together is pushing the market lower, especially the semiconductors and the NASDAQ. All right, also housing starts did come out this morning, 8:30 a.m. Eastern Time. Really not much impact. The housing starts did come out greater than expected and greater than the previous report. All right, that's today. A lot of news overnight helping to push the market lower, especially, again, semiconductors and the NASDAQ. All right, tomorrow, Taiwan Semiconductor does report earnings before the market opens sometime overnight. And then Netflix reports earnings after the market closes tomorrow. And then Friday is options expiration. That is the July monthly options expiration. And let's take a look at that. And this is the SPX options expiration concentration, shown by expiration. So this is delta notional on the vertical axis for each expiration. This is the Friday, July expiration. The orange bars are showing call delta notional. And no, that is positive gamma. So this is the market maker's call delta notional. And the blue bar is showing negative delta notional or put delta notional. So you can see this is a very heavily call dominated options expiration. Same as the June expiration, just smaller. And that can typically lead to some consolidation or additional volatility as that positive gamma that has been supporting the market expires on Friday. So Spotgamma, and also note today was VIX expiration. So Spotgamma has been looking for a period of market weakness in this time window beginning around the VIX expiration to the monthly options expiration on Friday. And I think that weakness, that volatility has already started. We'll take a look at that in just a couple of minutes. All right, so that's news for the week. And again, we'll talk more about the options expiration on Friday. Normally, I would talk more about that on Thursday. All right, let's move on to positional analysis now. So again, I'm going to start with the S&P 500. This is the ES Futures and Bookmap. Downtrend all day beginning overnight. This is going back to the overnight session. And the down move began accelerating right around 2 a.m. There was a little bump up after the open. Let's take a look at that now. And then the downtrend continued right around 10 a.m. So we'll look at that setup in just a few minutes. All right, so before I spend more time with this chart, I do want to take a look at a higher time frame. I'm going to go to the SPX, the underlying index, down about 75 points so far today. This is a one-day chart in Thinkorswim. Big rally last year. Correction began April 1st this year. Rally resumed after the April expiration. That was a slightly put-dominated expiration. A little bit of a pullback after the May options expiration. Consolidation around the June expiration. And then we'll see, it looks like pullback or more, maybe around the July expiration. All right, let's pick that up now with a 1 hour chart. Again, sticking with SPX, the underlying index. Here's the June options expiration. Again, a very large quarterly options expiration, very heavily call dominated. In the case of the June expiration, there was consolidation. Then the rally resumed right around July 1st. And now notice that volatility, realized volatility or historical volatility is starting to pick up quite a bit. So let's take a look. I'm going to zoom in on this chart. And what I'm showing in the subchart here is IV, implied volatility versus historical volatility. Implied volatility shown by the magenta line, and historical volatility, the actual volatility, shown by the blue line. And you can see that has started to pick up with this move down last Thursday. So historical volatility picking up. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. These levels remain in place for the entire week. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. Note, SPX gapped down below that lower daily expected move. Here's price action for today, and looks like there's no chance of getting back above that level. So again, SPX trading well below the lower daily expected move for today. All right, the red lines on this chart are showing Spotgamma levels. I'm going to point out the key daily levels. These are based on gamma-weighted open interest. First of all, here's the put wall at 5,300. That's a strike with a large net negative gamma that can be expected to act as support. Next up is the volatility trigger at 55.95. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. In a positive gamma environment, market makers' position on the gamma curve above that level, they have to trade against price to hedge their delta exposure. So at the beginning of the day, market makers' position on the gamma curve was positive, and now we'll take a closer look and see where SPX stands in terms of that volatility trigger right now, today. And certainly gamma notional, which we'll take a look at in just a minute, will shift more negative or less positive to potentially negative for tomorrow. All right, so that's the volatility trigger. And then above that is the 5,700 level, and that is the call wall. That's a strike with a large net positive gamma that can be expected to act as resistance. And that is also the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. And that level did move up from 5,600 yesterday to 5,700. So that was the only level shift for SPX. The absolute gamma strike did shift higher, and that is slightly bullish. All right, so those are the key levels. Let's wrap up our view of SPX with a 1-minute chart. Price action for today shown in the dark shaded portion to the right. Again, SPX did gap down below the lower daily expected move, and has been gradually grinding down some very key levels here. The volatility trigger at 55.95. Just above that is the 5600 level. That is kind of Spotgamma's line in the sand for looking for a sharp move down or more stability. So above that, risk off. Above that, risk on. Below that, risk off. So earlier today, SPX found support between those two levels, the 55.95 volatility trigger and the 5600 level. It has now broken down below that level, now trying to recover back up above the volatility trigger. So a couple of key levels in play for today. We'll keep a close eye on that, where SPX trades in relation to those two levels. All right, let's go back to Bookmap now. So in Bookmap, I have my own cloud notes, so I can show SPX levels. Here are the two levels that I was just talking about. Volatility trigger at 55.95, and then the 5600 level, kind of the line in the sand. And note there is an offset between ES and SPX, and today it is somewhere between 49 and 50 points. Looks like it's closer to 49 now, and I'm using 50. So I'm showing SPX 5600 at ES 5650. I'm also showing SPY levels on this chart. Here's the SPY 560 large gamma 2 level. Great entry point for a short this morning. And then here's the SPY 559 zero gamma level, and another entry point for a short this morning. All right, let me check for questions. All right. All right, Blogger New asked, when are there going to be talks in Spanish? There already are. So go to the Bookmap website, go to the Learning Center, you can check. And there's at least one free webinar, weekly presentation in Spanish. So hope that helps. All right, Gray asks, on Thinkorswim you have white columns. Those represent expiration dates. So Hector, which Thinkorswim chart? Daily, hourly, or minute chart? Let me know and I'll bring that up. All right, so those are the levels in play for today. Again, the 5620 and the 560 level, good entry points for shorts this morning. Secondary entry point at SPY 559 zero gamma level, and then there's keys levels of support at 55.95 volatility trigger and 5600 large gamma 3 level. All right, let's take a look at NASDAQ. So NASDAQ in a pretty steady downtrend up until just about before 1 p.m. So this is the NQ Futures and Bookmap. And let's take a quick look at the underlying index charts. I'm going to go to QQQ. And note for QQQ, all of these Spotgamma levels are well above. 490. Well above. That's the, I believe that's the last Spotgamma level. So QQQ trading at open territory, steady downtrend, maybe finding support just above the 482 level. Let's take a look at NDX. So the only NDX level below is the 19,750. That's the call wall. Actually, the put wall is below that at 17,000. All right, so earlier today, these two levels were in play, the 975 large gamma 3 and the 20,000 absolute gamma strike. 975 level acting as resistance. All right, back to Bookmap. So it looks like this downtrend is broken, and we'll keep an eye on that. All right, let's go back to Thinkorswim. All right, so here's Hector. Here is my one-day chart. These vertical red lines mark the expiration dates. And that's a feature of Thinkorswim. I believe you may have to turn that on. Thinkorswim, here's my Here is my 1 hour chart. If you're talking about these columns right here, this is just showing the overnight session. So the dark shaded portions are regular trading hours, and the gray columns are overnight session. So again, dark shaded portion, regular trading hours. So that's probably what you're talking about. All right, checking for questions. And Hector also asked, do you analyze expiration date on multiple time frames? Seems like such factor won't matter. I'm not sure I understand your question. I consider expiration dates whether I'm looking at any of these charts. First for last, do you enter the data into the cloud notes? I tried attaching the CSV file and it error in Bookmap, said unavailable. All right, I have covered this before in Bookmap. Let's go to back to Bookmap. Wrap up with the NASDAQ. So I have my own cloud notes in Bookmap. I use an add-on called Price Lines, not price levels, Price Lines. This is an add-on that's available in the Bookmap marketplace. I create a CSV file. Here it is. Here it is for NASDAQ. Oops. And that posts all the data in this column right here. And also draws the lines on the chart. All right, Hector, the expiration dates are shown on that's automatic part of Thinkorswim. I think you just have to turn it on the chart, and that will be whatever chart you're looking at, whether it's 1 minute, 1 hour, daily chart. If you're looking around an expiration date, then it will that vertical line will be shown on the chart. All right, so here's the NDX levels that I mentioned before, the 20,000 level and the 975 large gamma 3 level, and then there's this call wall shown below, and the only spot gamma level below that is the 17,000 put wall. And again, we'll take a look at setups in a few minutes. All right, let's wrap this up. And let's take a look at gamma notional at the beginning of the day. Quite positive. Again, gamma notional market makers position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Positive for the S&P 500 and pretty much neutral for the NASDAQ. Remember, S&P 500 has been stronger recently. All these numbers will shift substantially lower tomorrow. All right, so this is market makers' position on the gamma curve at the beginning of the day. This move lower probably would have been more substantial if gamma notional was negative at the beginning of the day, and certainly will be for the NASDAQ, much more negative, and probably for SPY as well. All right, so again, just a quick reminder, in a positive gamma environment for an index, spot gamma assumes that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge the delta exposure. So in this positive gamma environment, this is subduing this drop lower to some extent. All right, so that wraps up my positional analysis. So my thesis for the day, first of all, looking for lower volatility. Not necessarily the case today, but again, this move lower, I think would have been stronger, would have been more substantial if the gamma notional position at the beginning of the day had been negative. And then based on the levels alone, I'd say bullish to neutral. And let's see, I only cover shifts and levels for SPX, for SPY, volatility trigger, absolute gamma strike shifted higher, and put wall the shifted lower, so 2 higher, 1 lower for SPY. And then for NDX, both a volatility trigger and put wall shifted lower. And for QQQ, the volatility trigger and absolute gamma strike, just like SPY, shifted higher. So again, kind of a neutral to maybe slightly bullish, just based on the shifts and levels, but of course, a bearish based on the news overnight and the price action overnight and the price action during the day. All right, Hector, I'm going to talk. I appreciate your enthusiasm, all your questions. I'm going to talk about how I am approaching these levels and how I'm trading. So again, thank you very much for the questions. I hope what I go over in a few minutes will answer some of those questions. All right, so that was my thesis for the day. All right, so now let's move on to real-time data, to execution. So for positional analysis, I'm looking at the levels that are based on static data. Now I'm moving on to execution, moving on to real-time data. As always, I'm going to start with the S&P 500 and take a look at what options traders have been doing today. So this is let me go to the S&P 500 index signal. So this is the hero signal. This is available to Spotgamma subscribers. And this chart is showing options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The first, the white line, is the price for SPX, and the purple line is the HERO signal. HERO stands for Hedging Impact Real-Time Options. Hello, Caesar. Welcome. Glad you're here. And a rising HERO signal indicates traders are taking positive delta positions. They're buying calls and or selling puts. And a falling HERO signal indicates they are taking negative delta positions. They're buying puts and or selling calls. All right, so that is the index signal. There's another signal that we can take a look at for the S&P 500. That is the equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500. So this is the equity signal. Now I'm going to shift to puts and calls. I'm going to jump back to the index signal. And I'm going to zoom in, open up full screen. So in this chart, the orange line is showing calls. A rising orange line indicates traders are buying calls. Market makers sell the calls. They have to buy stock, or in this case, futures, to hedge their delta exposure. And then the blue line is the put line. And a falling blue line indicates traders are buying puts. So what happened to this morning in the equity signal? Initially, traders were buying calls from the open up until just before 10 a.m. Call buyers took their foot off the gas. The orange line flattens out. Traders start buying puts, and price starts to move lower. So that was just around 10 a.m., just a little bit before. All right, let's take a look now at the equity signal. So again, we know in the index, traders were buying calls up until about 9:55. Now shift over to equities, and it paints a more bearish picture. From the open, traders are buying puts and selling calls. And that accelerates lower right around 10 a.m. Price moves lower. All right, let's go take a look at Bookmap now. Go back to the S&P 500. Let's zoom in. We'll go from the open till around noon. Take a look at the order flow in Bookmap. First of all, the volume dots in Bookmap are showing market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So remember, in the index signal, the traders were buying calls up until about 9:55, and that's about when price reverses lower. Breaks below VWAP, that's a light blue line, then breaks below this SPX 5620 level and the SPY 560 large gamma 2 level. You can see all the magenta volume dots coming in. And then since then, the S&P 500 has made a series of lower highs. So options trades definitely driving price. Again, interpretation of the two HERO signals. Both the equities signal and the index signal, both bearish, shifting bearish right around 9:55, 10 a.m. Price breaks this uptrend, Good entry point again, right around SPY 560, and price moves lower. All right, so that's the S&P 500. Hector, I guess, is asking, is Hero, yeah, Hero is possible to follow in real time because it is in real time. Hedging impact real-time options. There's no delay. You know, maybe a second or two, but it is real time. And you can use the Hero signal for trading futures, options, or stock. All right, so that's the S&P 500. Need to extend my downtrend. All right, so just to be clear, this morning, as price is moving up, I see two Spotgamma levels here above price. Whoops, wrong tool. Price is moving up. Again, remember, traders are buying index calls. See two levels up above price that could potentially act as resistance. And as price reaches those levels, the Hero signals shift from bullish to bearish, or in the case of the equity signal, shift to more bearish. So I'm looking for an entry point for a short. And that comes in right at 10 a.m. Call line shifting lower, flow alert comes in. This flow alert is shown on the call line, but it really does not apply specifically to calls. So right at 10 a.m., just before 10 a.m., flow alert comes in, gets my attention. And just before 10 a.m., the call line shifts sharply lower. Also, there's a big block order right at 10 a.m., large institutional order, buying puts. Blue line, orange line, moving together sharply down, looking for an entry point for short. So here again was the initial entry point at the SPY 560 level, and then another entry point at the 559 level. And let's go. And again, for the index signal, call buyers took their foot off the gas, started buying puts, price moves lower, initial entry point 10 a.m., secondary entry point again at SPY 559. All right, so that's how I'm using that in real time. All right, Adil asked, limit orders where there's big orders on the current order book. Yeah, so it may be easier to see. Maybe easier to see for a stock. So we'll take a look at the order book for stock in just a minute. All right, let's move on. Running a little bit slow here. Here's NASDAQ, similar. So the only thing in NASDAQ here was to find an entry point for a short. Let's take a quick look at Hero for NASDAQ. So again, just like NASDAQ, just like the S&P 500, there are two signals that we can take a look at. Here's the index signal. It's a little bit wonky. There's something going on right at the open. So this is a combined signal. For NDX and QQQ. So that's similar to the S&P 500 index signal. And then the Mag 7 signal, this is similar to the equity signal for the S&P 500, except this is only showing options trades and market maker hedging activity for the 7 stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. And this chart looks very similar to the S&P equity signal. Let's go back to full screen. Selling calls from the open, buying puts. Large block order comes in. So we know that large block order is on one of the Magnificent Seven stocks. So we'll see if we can find that in just a minute. All right, so again, both these lines moving lower. Looks like they may be leveling off now. Let's go back to Bookmap. So steady downtrend. Multiple entry points for short. That at around QQQ 488. The second entry point at the 975 large gamma 3 level. Now it looks like the trend has been broken about 1 p.m. as the call sellers and put buyers have taken their foot off the gas. Caesar says, looking still like a call-driven move. This in a bullish market, bull market, I think typically price action is call-driven. Remember, the options expirations have all been call-dominated. So yeah, definitely call buying and selling, driving price. All right, let's take a look at some stocks now. Let's go to Apple. All right, so a deal again asked limit orders where there's big orders on the current order book. So the heat map in Bookmap shows a history of the limit orders in the order book. Below price, like this morning, these were limit buy orders. So those were limit buy orders, came in before the cash open, looking to get long Apple at 228. And now there are limit sell orders at 229.50, also at 230. And the darker the shading, that indicates more orders. Again, this is the heat map and Bookmap showing a history of the limit orders. And this is pretty typical for stock. These orders will come in the order book and will stay until they're filled. So here's Apple. Let's take a look and see what options traders have been doing in Apple. So from the open, buying puts, shown by the falling blue line. Also selling calls, shown by the falling orange line, right around 10:15. Take the foot off the gas, start slightly buying calls and selling puts. And now price is trying to recover. So up until about 10:15, both the call line, blue line were moving in the same direction. Market makers take the opposite side of those trades, and they have to sell stock to hedge their delta exposure. Note 230 is the key gamma strike. Price did break below that. And that's where those limit orders, limit sell orders are located. Again, right there at 230. Let's take a quick look at this move down. This indicator that I have in the subchart is the market pulse price change indicator. And the bright green, bright red showing extremes. In a downtrend, I'm looking at these Areas of bright green, the market pulse price change, extremes for a deeper pullback for a short entry. First short, right there. Second short, just below VWAP, lining up with the bright green again. All right, that's Apple. Let's move on to AMD. Very weak day in AMD and other semiconductors. Note all the magenta volume dots. Hardly any buyers to be found. That's shown by the falling cumulative volume delta. Also the magenta volume dots. Let's see what options traders have been doing in AMD. In AMD, they have been selling calls, buying puts. Blue line, orange line moving in the same direction. In this case, a very bearish directional signal. Go back to Bookmap. All right, let's move on. Let's take a look at ARM. Another semiconductor, very weak. 170 is the key gamma strike. Good entry point for a short this morning, right around VWAP, 170. $167.50 is the put wall right here. That was initially support for this quick move lower right at the open. And then the second test of that, arm sliced right through that level. All right, let's see what options traders are doing. Go to ARM. $170 key gamma strike. Price breaks below that as traders sell calls. Large institutional order there. Buy puts. Price moves lower. Again, on the second test of this 167.50 level, slices right through that level. All right, the next stock I want to take a look at is CrowdStrike. When I was looking at this earlier today, it looked like the 355 put wall held. Price did break below that level. Now it looks like it might have recovered that level. Flow alert comes in just after the cash open. Gives you a very good entry point right around 955 when NASDAQ started to turn lower. So really, here you go. Caesar calls really driving price in CrowdStrike. Let's go take a look at Bookmap. Caesar asked about SMH. Yeah, I don't have that in a Bookmap. I'll take a look in Hero. All right, so there's the 355 level. Looked like that level did hold the support in the morning. Looked like it might hold again, and then price broke below her, and now trading back above that level after moving almost down to the 350 level. All right, let me check for questions. Oh, Adil, I missed your earlier question, how does one take trades of this? So that's what I'm talking about right now. I'm talking about trade setups and the basis of those setups, the order flow in Bookmap and the hedging flow in Spotgamma Hero. So I'm identifying what options traders are doing. I'm identifying the trend in Bookmap. And if there's a downtrend, I'm looking for entry points for short. Pull back at VWAP, for example. Trend break. This may not be the best example, but lining up short entries with the market pulse price change. So I have falling cumulative volume delta. I noted that traders are taking negative delta options positions. And here at this point, I'm just looking for entry points for short. And Jose asked, are you still using Equity Hub to guess direction on stocks and indexes? So yes, I do. I don't have time to talk about thesis for every stock typically. I do that in some of the case studies that I publish for Spotgamma, show my detailed analysis. The last one, I believe, was Meta. All right, let's move on. Speaking of Meta, Meta has been pretty weak for the last several days. Let's see what options traders are doing. All right, so there you go again. Caesar, call-driven market. Traders have been selling calls all day, shown by the falling orange line. They're also buying puts, but the call sellers are dominating. Good entry point. Again, when everything started to turn lower, just before 10 a.m. Let's go to Bookmap, take a look at that. So we know for Meta, traders are selling calls, looking for an entry point for short. Zoom in. So if I'm watching Meta, watching traders selling calls, oops. Waiting patiently for Meta to break down below this pattern. A couple of early entry points would have been at these market pulse price change indicators, these pokes above VWAP, best entry point below 475 as price breaks sharply lower. And finally, let's take a look at Tesla. Hector is asking about positional analysis. That is the analysis of how options traders and market makers are positioned in the options market. So every day I talk about the levels in the S&P 500 and NASDAQ, how those levels shift. So if all the levels, many of the levels shift higher, that indicates to me that traders are looking for, accepting, and positioning themselves for higher prices. On the other hand, if levels shift lower, multiple levels shift lower especially, That indicates to me that traders are looking for, positioning themselves, and expecting lower prices. So that's positional analysis in a nutshell. And Jose asks, are you still using sliding scale hero signal to guess direction on stocks and indexes? Not sure I understand your question. I'm showing how I use hero now. So I just talked about that in Meta. How I was watching as traders were selling calls, looking for, patiently waiting for an entry point for a short. All right, next is Tesla. Tesla has been strong this week. Let's see as what options traders have been doing in Tesla. Initially, traders were buying calls. Oops. Traders are buying calls, not doing much with puts. Then that starts to reverse lower. Traders start selling calls right around 10 a.m. 10:05, they start buying puts. Blue line, orange line moving the same direction. Price moves lower. Blue line, orange line moving up. Price moves higher. Blue line, orange line starts to move down. Price moves lower. All right, so what I'm doing, I'm looking at the hero signal on one screen, order flow and Bookmap on another screen, and making trading decisions based on, again, order flow and hedging flow and reactions at key levels. All right, so note 250 is the key gamma strike, 247.50 hedge wall. Here's the 247.50 hedge wall. So around that level, acting as support so far today for Tesla. All right, Caesar wants to take a look at SMH. The semiconductor tracking ETF. Pretty choppy hero signal. Note all the flow alerts. That's pretty indicative of a choppy hero signal. But SMH is moving lower as expected. All right, so not much in the way of the hero signal here to provide any additional insight on SMH. Much more clear on the semiconductors. Yeah, you're welcome, Caesar. Says extremely low notional, but I guess all the money is in the individual names. Yeah. So let's take a look at, go back to the Mag 7 signal, see if we can find that large block order of puts. And I'm guessing that could be NVIDIA. No, not NVIDIA. So let's go Apple, Amazon, Google. No, not really. Maybe Microsoft. Yeah, there it is. This is pretty typical of Microsoft. A lot of large institutional orders. And that was what was causing that vertical line in the Mag 7 signal. Large block order, institutional order, buying puts. All right, let's circle back. Let's take a quick look at the index charts. Looks like the S&P 500 may be trying to recover. Let's go to Bookmap. Go back to the S&P 500. Looks like for at least now this downtrend is broken. Double bottom here. In this case, the second leg a little bit higher than the first leg. Trend break now, the S&P 500 trying to recover. So back above the 55.95 volatility trigger key level, trying to break back above the 5600 line in the sand level. Let's check NASDAQ. All right, last call for stocks and questions. Looks like NASDAQ made a triple bottom here. Trend break. Now maybe trying to grind higher. Go back to the S&P 500. All right, it looks like no more questions. No more stocks. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for all your questions and comments. I hope I answered everybody's questions. If not, please post your questions in Bookmap Discord in the Options-Doug chat channel, and I'll do my best to answer your questions. All right, everyone, have a great afternoon. Remember, options expiration on Friday, and we'll talk about it on Friday afternoon. All right, everyone, thanks. Have a great afternoon. See you on Friday. Bye.